Hello there. Welcome to my class. My name is Marcio de Paula, and I will be your instructor for today's lesson. Today we will be talking about QuickBooks Desktop 2020 Chapter 13. The accounting cycle and using classes. In this chapter, you will learn about the accounting cycle and review generally accepted accounting principles, GAAP, through a QuickBooks lens. Throughout this chapter, you will work in depth on the first 3 steps of the accounting cycle, while exploring how classes can help with the process. Using classes in QuickBooks allows you to classify transactions, giving you more data with which to manage your business. Wrapping up this chapter, you will learn about and produce a statement of cash flows. By the end of this chapter, you will be able to work with the accounting cycle and GAAP, use class tracking in transactions and reports, create a statement of cash flows. Now, let's get started. In this chapter, you will continue working with Parrot's Paradise Resort as you go a step past behind the scenes and look at the steps of the accounting cycle. There are 7 accounting cycle steps, and you will work closely with the first 3 steps as well as with classes in this chapter. Finally, you will examine the cash flow for the business and the profit and loss by class by producing statement of cash flows and profit and loss by class reports. The accounting cycle and GAAP. Now we will dive deeper into what occurs behind the scenes in QuickBooks. So far, you've had a glimpse of this through the behind the scenes and flashback to GAAP features of this book. Next, we will look at how the accounting cycle and GAAP apply to QuickBooks users. Time to review generally accepted accounting principles, GAAP. Every industry follows standards and best practices for that industry. When it comes to accounting principles, the best practices are the same across industries. GAAP are rules used to prepare, present, and report financial statements for a variety of entities and must be followed by publicly traded companies. As GAAP attempt to achieve basic objectives, they have several assumptions, principles, and constraints. The accounting cycle and fiscal period. Accounting records are kept and used to produce financial information. The records are kept for a period of time called a fiscal period, which can be any length of time. It may be a month or even a quarter of the year. Most businesses use a year as their fiscal period. A business doesn't have to use the dates January 1st through December 31st as its fiscal period. Many businesses start their fiscal period in February and end in January. Local government and educational institutions often use a fiscal period that begins July 1st and ends June 30th. The accounting cycle is a series of steps that help the business properly keep its accounting records during the fiscal period. Prior to the steps outlined here, you should make sure to collect source documents and verify the financial information, which is sometimes considered a first step. The steps of the accounting cycle. 1. Analyze the business transactions. 2. Record the business transactions, both debit and credit parts, in a journal. 3. Post each journal entry to the ledger accounts. 4. Prepare the unadjusted trial balance. 5. Prepare adjusting entries and run an adjusted trial balance. 6. Generate the financial statements. 7. Prepare closing entries and the post-closing trial balance. This information is used by business owners, of course. Banks also use it as part of their analysis before lending money to a business owner. They need to know how the business is doing financially. And finally, when assessing taxes, the government needs to know how much revenue a business is generating, so they use this information as well. QuickBooks takes care of a lot of the steps behind the scenes. But you'll need to exercise some common sense to avoid possible future trouble. Throughout this chapter, we'll look at the first 3 steps of the accounting cycle and how you and QuickBooks can work as a team to ensure your books accurately document your company's financial scenario. Collecting and verifying source documents. To complete the first step in the accounting cycle and analyze transactions, you must first ensure the information on source documents is recorded correctly in QuickBooks. Source documents take many forms. Whether you're dealing with a receipt, check stub, utility bill, memo documenting the transaction, or another document, it's up to you to verify the information on it. The Doc Center makes it easy for you to keep track of source documents. The Doc Center stores your source documents electronically, attaching them to the transactions or list entries to which they belong. You can enter documents into the Doc Center in several ways, including via the drag-and-drop method from Windows or Outlook, from a scanner, from another storage location accessible by your computer. While it's convenient and affordable to use the Doc Center, the files contained within it are not secure, so you need to take additional precautions when storing documents with sensitive information. You may wish to consider a third-party secure document management service. Guess what? There's an app for that interfaces well with the QuickBooks Doc Center and provides security features to protect sensitive information if that's a concern. Classes. Classes and subclasses provide an additional way to track information about transactions. They allow you to keep an eye on particular segments of your business, such as new construction versus remodel, tracking income and expenses for each. This way, if you want to evaluate which segment of the business was most profitable, it will be easy because transactions containing class information can easily be displayed on reports. Class tracking is a tool for you to use with your unique business based on what you want to see on your reports. Classes can help you during the accounting cycle by providing another level of analysis. When the class tracking preference is enabled, QuickBooks adds class fields to many forms and registers such as the Create Invoices form, Enter Bills form, and Reports. You can also run specific class reports such as the profit and loss by class. Similar to other lists such as the vendor type list, you can't delete a class that's been used in any transaction. Classes can be edited in much the same way you edit other list entries. A class example. Jimmy just opened a new venue in town that will allow him to host larger events. He'll be selling merchandise at this location as well. To track his profit at each location, he will be using classes in QuickBooks. You will set up 3 classes for Jimmy: Resort, Amphitheater, and Overhead. Any purchase or sale that is not for one location will be coded with the Overhead class as a catch-all. The classes for Parrots Paradise Resort will allow Jimmy to track profit and loss by location. Planning for class tracking. Just as when you create a new company in QuickBooks and you take time to plan what you need the company to do for you, you need to do the same before you begin to track classes in QuickBooks. Think about what type of reporting you need for your company and exactly what information you need to display on your reports. Classes should be used to track just one aspect of your business, or the data will be meaningless. Additionally, you should not use class tracking for an aspect of your business that is already tracked, such as a customer or vendor type, and you must be able to apply the class to all transactions involving income and expense accounts. When setting up classes for your own company, also create a class for any type of transaction that doesn't apply to one of your named classes, such as overhead or administrative. This is important because you want to make sure you apply a class to every transaction involving an income and/or expense once you set up your company to track classes. Using classes for profit center reporting. Many businesses use classes for profit center reporting. A profit center is a sector of a business for which income and expenses are tracked separately so its individual profitability can be determined. One type of business that often relies on profit center reporting to ensure that the entire business is operating efficiently is farming. Subclasses. Even though you are allowed to use classes to track only a single aspect of your business, you can use subclasses to classify your data further. For instance, a restaurant can set up main classes to track income and expenses by location, and then list food, bar, and catering as subclasses under each location, main class. Don't use classes to track more than one aspect of your business. If you need additional tracking, use subclasses. If you use classes to track more than one aspect, it will render the class data meaningless. Applying classes to transactions. If you decide to use classes, apply them to all transactions involving an income and/or expense account. This can be done through most forms, registers, or journal entries. QuickBooks provides several class tracking reports, and you can customize many other reports by adding the class field. You can create budgets based on them. You can also apply classes to payroll transactions, either to a whole paycheck or individual earning items. You find the class field in sales forms, such as create invoices and create purchase orders, and on expense forms, such as pay bills. Customer deposits don't need to have a class assigned to them because they don't affect the income statement. Once class tracking is turned on, you will see fields on forms in which to enter the class data. When you enter a class at the top of the form, it will automatically apply it to each line, although you can change it if needed. When you begin using class tracking, it's important to consistently apply a class to every transaction that deals with income and expense accounts so your data, and therefore reporting, is meaningful. If you apply classes to only some transactions, and then create a report to show the profitability by class, the information will be skewed. This is why it's important to have a class for transactions that don't fit one of your main classes, like overhead. Cycle Step 2: Record Journal Entries. When you enter a transaction in a QuickBooks form, invoice, bill, etc., QuickBooks performs the work behind the scenes by including the necessary general journal information. In other words, it uses the correct accounts and moves the money accordingly along with the memos and other information that you've entered into the form. When entering any transaction, be sure to follow GAAP. If you were doing this by hand, you would need to enter the date of the transaction, the account names and amounts of each of the debit and credit parts, a reference to the source document, or a brief explanation. In QuickBooks, ensure your items are set up properly, i.e., routed to the right accounts, so the proper accounts are debited and credited in the journal that is kept behind the scenes for you. QuickBooks keeps a journal for you as you enter each transaction. Note the last 4 transactions that you just entered and the class field that has been added to the journal report. Cycle Step 3: Post Journal Entries. In the third step of the accounting cycle, you find the entries that were entered into the general journal posted to the individual ledger accounts. This step is done entirely behind the scenes for you, thank you, QuickBooks. If using the Premier Accounting version of QuickBooks, you can run a general ledger report that shows the balance of each account and the transactions that affect it, broken down by debits and credits, for the stated time period. Running class reports. The goal of using class tracking is to produce reports that focus on the areas of the business you are tracking. They will help you determine profitability in those classes and could assist you in making decisions on the future direction of the company. This report displays any transaction amount that is not associated with a class. Running this report periodically can help ensure you don't miss any transactions. It's then easy to use the quick feature to drill to the unclassified transactions, source documents, and assign a class to them. When you've applied classes to all your transactions, running this report displays the net income, loss by class, broken down by income and expenses and categorized by class. If there are unclassified transactions, you'll have a column before the total column displaying the total amount that has not been classified for each account. You can drill down to the source documents through this report, so you can assign classes to the transactions. The profit and loss by class report shows net income by each class, as well as overall for the company. We've only entered a handful of transactions for June 2022, so you should realize that this report will be much more extensive once all transactions for the month are entered. The balance sheet by class report is available in the Premier and Enterprise versions of QuickBooks. In this report, each class appears as a column. This is not a basic report for novice users, as it may display unexpected results at times, and the ability to understand and fix these anomalies requires a solid accounting background. Producing a statement of cash flows. The statement of cash flows is a financial report that's been required under GAAP since 1987. It plays an important part in showing how viable a company is in the short term. This helps stakeholders determine whether the company will be able to pay its bills, payroll, and other expenses. It also indicates the financial health of the company. While the profit and loss report looks at the total amount of income coming in and the expenses going out, the statement of cash flows specifically looks at the cash inflows and outflows during a period of time. Per GAAP, corporations are required to use the accrual basis of accounting that records when income and expenses are accrued rather than when cash is exchanged. The statement of cash flows essentially translates the company's data from accrual to cash basis, so an understanding of how the company is operating and how cash is being handled can be reached. Remember that publicly traded companies must record when revenue is realized and earned, accrual basis of accounting, not when cash is received, cash basis. QuickBooks uses the indirect method when creating a statement of cash flows. This means net income is the starting point for the report, and you adjust for non-cash transactions from there. Basically, you take a net income generated using the accrual basis of accounting and convert it to the cash basis by adding increases to current liability accounts and subtracting increases to current asset accounts. Remember that consistency means the company uses the same accounting principles and methods from year to year. There are 3 sections of the statement of cash flows that organize your company's financial information. Operating section. You take the activities that result from the normal business operation and convert them to the cash basis. These activities may include such things as sales receipts, production costs, advertising, payroll, and expenses for services performed. Investing section. You account for fixed assets bought or sold, loans you have issued, and other payments unrelated to normal business operation, example, payments related to a merger. Financing section. You take into account such items as cash from investors, company stock and bond transactions, and dividends that are paid. Ensuring the accuracy of the statement of cash flows is critical. All transactions to receive payments, pay bills, and deposit funds should be performed before running the report. The statement of cash flows shows the company financials as if you were using the cash basis of accounting. It helps determine the liquidity of your company. The Statement of Cash Flows section on the Company Preferences tab, Reports and Graphs category, holds the Classify Cash button, which allows you to assign accounts to different sections of the report. Forecasting cash flow. The cash flow forecast report is important because it's one of the main financial statements used to get approved for a loan, attract shareholders, or demonstrate the financial health of your company. You can also use it internally to help guide decisions that you have to make for your company by giving you a tool by which you can forecast the cash that is and will be flowing into and out of your company. The date range for this report will be in the immediate future. The accounting cycle in practice. In theory, there are particular things you should be doing on a daily, weekly, monthly, and quarterly basis in your business. These practices help with report accuracy and ensure you aren't missing anything. By coming up with a routine, you will also be more aware of potential cash flow problems. These are some tasks you should stay on top of to make QuickBooks work best for you. Know what's in your bank accounts at the start of every business day. Record all transactions, including cash sales, bills paid, checks deposited, and orders placed. Run payroll on time and scan any related documents, such as receipts, into the Doc Center. Run reports such as the unpaid bills detail, open invoices, or aging detail, unbilled costs by job, and any other that will aid in pointing you to a potential issue. Depending on what these reports tell you, take action by paying your vendors, making collection calls, or sending statements. Don't forget your tax bill. Try to estimate your cash flow for the near future. What will you need to spend? Can you make payroll? Reconcile your bank and credit card accounts on a monthly basis. It's a good idea to run a trial balance on a monthly basis. If you're maintaining inventory, make sure it's accurate. Cash flow is important. Stocking too much can hurt your cash flow, not having enough to sell can hurt your bottom line. Run the profit and loss and balance sheet reports fairly often. They tell the bigger picture. That's all for today. Your next step is to review this chapter and get the exercises started. Thank you for participating in today's lesson. I will see you in our next session. And remember, if you don't know, askmarcio.com.